Well, welcome to this lesson of Overnight Accountant's Real Estate Agent Tax Cut Library. You may notice this is a revised course. Well, I should say not a course, but this is a revised lesson due to some tax law changes relative to the, related to the Tax Cuts and Jobs Act, which I may mention in a couple of moments. This is revised. We're going to keep you guys up to date. And so here's some new information. This entire course, or I should say the entire library, discusses expenses on Schedule C. We want to minimize your taxes. That's why we're discussing this. That's why you purchased this course, this library, I should say, and thank you so much. So let's get into it. This lesson is about local business meals, notes, and record keeping. So we're talking about local business meals. We're discussing notes, specific things, some little tips for you, how to maximize your deduction, things you're going to need to keep to prove your deduction, and easy ways to keep those records so you can later prove your deduction. So let's roll into it. Okay, spouses and family. Guess what? You can actually deduct taking spouses and family to a business meal if it qualifies as a business meal, if it would be impractical or impractical not to take them, or it advances your business purpose. So if you say a prospective client comes to town with their spouse and their kids to find an agent, and you take your spouse and kids to that same meeting, just because it would, makes things flow a little bit better. Your spouse can talk to their spouse. They've got kids. You've got kids. You can deduct everyone's meal in that circumstance. So that's pretty cool to know. You take your spouse to help seal a deal with the other spouse there. As I said a moment ago, you get two spouses there, and they're together. If it advances your business purpose, those are all deductible. So that's cool. Let's say they bring their kids and you bring yours to keep them occupied. As I said a moment ago, deductible. Now be careful here. Make sure you have a business purpose, or there's no deduction for that person. So let's just say you take your spouse. There's really no business purpose you could argue to take her. Your meal and the other party's meal, the other business party's meal could be deductible, but your spouse would not. So if you're going to do this, plan ahead. Make sure you can maximize that deduction and you can have some fun at the same time. Here's something to look out for. Meals with your spouse or significant other, because you see them all the time and you eat together all the time, they are not deductible. It's very hard to have a business purpose with that individual. They're generally not deductible. So don't even try it, even if your spouse is a realtor. I know a lot of folks, they would form a corporation or they'll bring their spouse along for meals. They call it a business meal. You guys can discuss business all the time. So basically, let me get back to here. If you're going to do it very rarely. Make sure you have a business purpose. Make sure you have an agenda. If your partner's in a business even, make sure you have an agenda, like it's a formal annual meeting. But if you have a weekly meeting, it probably is not going to fly. So just be careful with that. Remember, you have to substantiate these meals later. What about going Dutch? And you know what that is? That's where each attendee of the meal pays for their own meal. Are those deductible? No. Okay, let me just tell you right now, that 50% limit that the IRS has for the 50% limit, even if there may be 6 or 7 people there, that's really because they don't want to be deducting the cost of your own meal because you're going to eat anyways. So if you do go Dutch, there is a little caveat here. I'm going to be able to bring this up. I'm going to bring it up in this lesson a couple times. It goes this Sutter rule, which we're not going to dig into, but I'm not going to dig into tax law or case law. But let's just say, for example, that you go Dutch and you don't eat very, very long. So you go to a restaurant, a business network meeting or whatever, which I think we're also going to discuss in a few minutes. But you go Dutch the meal, which means you pay for your own meal, and the other parties that are there pay for their meals. So you're there, you each pay for your own meal. But let's say you brown bag it every day, and you usually spend like $2 for your meal because you bring a sandwich or whatever that might be, and your meal today was $10. So if you can prove that to the IRS, guess what? You can deduct the difference. You get an $8 deduction because it is more than you would regularly spend. But it's your job to prove it. So going Dutch, it's possible to have a deduction, but you have to work for it. Network meeting meals, which I just mentioned a moment ago, same rules apply as going Dutch meals. They're only deductible if you buy for yourself and the others. And remember, that's 50%. If you're by yourself, it's going to be the difference between what you would normally eat versus the cost of your purchase. This is based on a 1953 tax court ruling, which I'm not going to get into, but it's still the Sutter rule And if you want to Google that, you can find out more information. The key here is to document, have proof for whatever you're doing. If you can still make the deduction, it might not be worth the effort, but over the course of a year, you eat brown bag it every day, you go to eat once a week somewhere, and it is formally for a business purpose, even though you buy your own meal, it might be worth it. So here's some more notes. Business meals are 50% deductible, so make sure you properly enter them into the software or inform your preparer. So make sure you enter them into your software, and make sure, because of software, if you're doing your own taxes, some meals, like if you're into transportation, like intercontinental freight or whatever that would be, long haul trucker, you can deduct those. Department of Transportation rules at 80%. You're not 80%. You're deducted at 50% for regular business meals. Some meals are 100% deductible, but it's really food that is. We'll discuss that here in a little bit. Okay, if your broker or someone else reimburses you, expenses are only deductible if it's included in your 1099. So if you're kind of rare, but let's say your broker reimburses you for your business meals, can't imagine them doing it, but even if you don't have a broker, if you're reimbursed for those meals, and they don't include that amount in your 1099, that is not deductible. And it could be deductible by them if you give them the receipts, and it's not going to be included in your 1099 that way. But if they do include those reimbursements on your 1099, you can deduct it. So be very careful with that. And it would be a 1099 MISC that you would receive. However, now under the current rules, I should have changed that, but I'm not. It's 1099 NEC, non-employee compensation, which we have a course on that if you want to watch it. Okay, so that's what meals could be 100% deductible. Let's say you're buying food, and these really aren't meals. Let's just consider this food you're buying for a legitimate business purpose. You buy food for an open house, for snacks or whatnot, folks coming by, 100% deductible. You're going to deduct as an advertising expense. You don't put it on the line with a 50% deduction. Say you buy donuts for a gatekeeper. You're going to go around as part of your promotional campaign. You're going to all the mortgage brokers. You're going to buy them donuts, rotating once a week. You buy donuts for different brokers with your cards all over them, or a different broker, let's say mortgage broker, I should say. That's going to be another advertising expense, 100%. So there's a little marketing tip for you. Let's say you teach at a class and you provide food at this teaching or this seminar or whatever you're doing, at this training event. The meals for the attendees, 100% deductible. Meals included in your seminar fees. If you're having a seminar and it's included in the fee, they give you $100 or whatever, and that buys them food. For you, that's 100% deductible as part of your seminar cost. You do get something each year. You could say you have an annual picnic for business associates or clients, let's say, generally for employees most common, but an annual picnic or party, promotional expense, or an other expense can be deductible at 100%. The key is ask why. If you're purchasing food, ask why you purchased the food. Maybe it's deductible somewhere else other than a meal. I want to tell you, okay, here's a different rule for employees. I knew this was coming up. Ask your professional about the gray areas. There's a lot of argument right now, Tax Cuts and Jobs Act, that changed a bunch of things. That's why we're redoing this, because entertainment costs are out now. And there's a big argument like snacks for your office, whether they're 100% deductible or 50% deductible for generally employees or the general public or whatever. There's some gray areas there, so be careful with that. Entertainment is not deductible right now unless Congress decides to change the rules again, and then I'll be redoing this lesson again. But until 2025 under the Tax Cuts and Jobs Act of 2017. So entertainment is out. We did have some sections on entertainment we had to pull from this course, or this library I should say, but they're out for right now. Now associated meals, which we discussed in a previous lesson to this one, during entertainment can be deductible if billed separately. Now let me go back to this before I say it's a mess, because it is a mess. Let's just say you go to you take a client to a football event, or you go to somewhere and that's entertainment. Okay, even if it would have been deductible as entertainment before, it's not deductible now. But if you buy those hot dogs and whatnot separately, and you get a separate receipt, whatever you would eat at this sporting event or entertainment event, if it's related to business, associated business meal, meaning like you go to entertainment directly after a meeting, it's kind of a mess. I would get some professional advice on this, but right now, as I'm speaking right now, the hot dogs will be deductible, but they have to be billed separately, and So you would have to purchase them separately, and you would have to prove that it's related to business, associated with business, which is in a previous lesson. In short, it's a mess. Okay, let's get into meal record keeping. What kind of records do you have to substantiate your deduction for local meals? This is super important. Can't express it enough because it's your burden of proof is on you as the taxpayer to prove your business purpose that was related to your meals, and you get the deduction and the amount and location and all this good stuff we'll go over in a minute. Number one reason a deduction is denied: poor records. Primary reason a deduction is not claimed by realtors or business people in particular is because you have poor records and you didn't keep the records you needed to take that deduction, and you forget about it. For whatever reason, you can't take the deduction, or even if you have a decent preparer, if you're just giving them this cost and you don't have substantiation, they may not allow you to take those because they know you're going to get yourself in trouble, or they would advise you not to. Now, if you want to keep the deduction, tax saving from records, I'll give you an example here. Say you have $100 a month on business meals. It's reasonable. For a lot of folks, that's $1,200 a year. That's a $600 deduction because you get 50%. You just save yourself over $250 in taxes just for keeping the records. Keep the records. There you go. All right, here's some tips for you. Write the business purpose and the attendees on every receipt. Also, keep it in your calendar. If you have a calendar, it's great. Write it on the receipt. Calendar and also credit card statements, whatever. You're going to need to line up your business purpose, those who were there, to prove your deduction. Use a record-keeping system, which we discussed in one of the earlier lessons in this course. Easy record-keeping for realtors and small business owners. You can go back to that and review that. That'll help you greatly. Now, records you need to prove the amount of the expense. So, best way to do that is a receipt or other proof. Credit card or debit card would be other proof. You know, it's going to list what you need to have in order to prove the amount of the expense. A canceled check's always good. Oftentimes people using debit or credit cards are much more common, and they're being much more accepted now as proof of a deduction. If it's over, I'm going to throw travel meals in here, but if you're in a travel meal and it's over $75, you're going to have a receipt for it. That's really not the purpose of this lesson. I just want to let you know that. If you go to the travel meal section, I try to downplay that some because I want you to have a receipt, okay? That's the easiest way to prove your deduction. You're also going to have the date and the general time of the meal. Receipt's great because oftentimes they're time stamped. General time, you know, breakfast, lunch, dinner, when was the meal. You don't have to prove it was like 11:58 a.m. or anything like that. But you need a receipt or other proof, which we discussed, credit card or debit card statement. Cancel check's always good. Calendar or date book would actually prove if you tie that to the expense of the credit card, in your date book you have business purpose, meeting with Luann to discuss, you know, the Turner home or whatever. That would count. Tied to the expense, tied to the date, matches your calendar matches the receipt or your credit card entry. Boom, you got yourself a deduction. Location of the meal, name and address, receipt or other proof. Once again, I'm repeating myself a lot here. Credit card or debit card statement's going to tell you, they're getting better at that. Oftentimes, you use credit card statements, you often used to have codes and things like that. Now it'll actually tell you Domino's or whatever the restaurant name was. So you got that. Cancel check, once again, calendar, date, book, always great. Business purpose. Now, this is what can get you in trouble. Okay? You might have everything else, but you still got to prove why did you have it? What was your business reasoning in having this? What benefit were you pursuing? If the meal was before and after a business activity, make sure you document that activity. Meaning if it's an associated meal, document the activity, the business meeting, whatever that is. Why were you there? Oftentimes your calendar will refresh your memory, what you were discussing. Just make sure you have proof of your business purpose. Remember, business meals require some type of preparation. We discussed this in an earlier lesson. Business meals are usually on your calendar, and you usually have some type of agenda, some type of preparation into that meal. So that would define your business purpose. Business meals are on your calendar, as I said a moment ago, and they do require some type of preparation because you're there for a business purpose. You also need to prove your relationship with the attendees. Names and titles of those in attendance. Calendar is great. Why they are relevant to your business purpose. Business meals never happen alone. Remember that. Proof that you or an employee were there, or to say your agent was there at the meal that you're paying for, and there's a business purpose why you were there with the other individuals that were there. A great way to prove a business purpose in a relationship is to do follow-up. So follow-up is excellent. If you're ever under audit, you can say, well, I met with so-and-so to discuss this or that, or to try to get a referral. and you can also tie that into an email that you can just dig out by searching in your email platform or whatever you use. You can dig that up and tie it to it. That's a good idea to put it in your calendar. I mean, to put it with your business records, let's say. That's a great way to do it. That's proof. You want to mention and summarize any discussion that you had with regard to your business purpose. Mention the business purpose in the email. You're going to get it, particularly, you might be, some places you might be spending a couple $100s on a meal. Particularly if you take your spouses, which can be allowed if you read watch our previous lesson. So it's important to save these, okay? Print and save the letter with your receipts, and that's it. So we just finished your notes and record keeping, so now you should really be prepared to maximize your meals deduction. Thank you so much, and check out the next lesson.